Florida real estate is still moving, but not in a straight line. Billions are closing even as prices in pockets like Collier County step back. Start at the shoreline, where global money meets concrete and glass. In the Miami metropolitan area, international buyers accounted for 15% of all home purchases in 2025. Set that against a national share around 2% and a Florida state average close to 5%, and the scale comes into focus. The city is an outlier by design. It is built to pull capital across borders. This is not a trickle. It is a tide. International buyers acquired more than 5,300 properties in Miami in 25, up from around 4,000 the previous year. The total put to work, $4.4 billion. That is money committed, units spoken for, and neighborhoods reshaped. Brickell, downtown Miami, Edgewater, Sunny Isles. The names sound like postcards and behave like balance sheets. One layer higher, Florida is the banner market for international home buyers in the United States. The state attracts 21% of all international home sales nationwide. That leadership is not a fluke. Florida has held the top spot for 17 straight years. This is habit. And habit becomes structure. The concentration is even sharper within the state. Approximately 45% of all international home sales in Florida happen within Miami, Fort Lauderdale, and West Palm Beach. Almost half of the international action in the state is anchored in those three metros. A cluster drawing from the hemisphere. Why do they come? Security. In one survey of international buyers targeting Miami, 93% cited capital security, the stability of the legal framework, and the city's strategic location as key reasons. A market denominated in dollars matters to someone who earns in pesos, reais, or bolivares. The calculus is not complicated, but it is decisive. The playbook is straightforward. Diversify, protect, and, when possible, earn in dollars. The mechanics of buying echo that strategy. The growing presence of international buyers in new development and pre-construction is a tell. Staggered payment plans. The chance to enter early. The potential for appreciation before delivery. For investors from Colombia, Argentina, Mexico, Brazil, and Venezuela, those features are not abstractions. They are tactics learned in economies where timing and capital controls can bite. Step across the state's map to a different tempo. In Collier County, where Naples is the reference point, listing data shows a market catching its breath. In December, the median list price sat at $729,725. That was a drop of 5.8% from December 2024, when the median list price was $775,000. In 1 year, the midpoint for asking prices took a step back. Size and asking price take in a different rhythm there. The median listed home in Collier County measured 1,816 square feet and sat at $415 per square foot in December. Price per square foot was down 5.5% from December 2024. The change is not just on the total ticket. It is in the way each square foot is valued. Speed slowed as well. Listings in Collier County spent a median 75 days on market in December. The national median was 73 days. The local number was also slower than November, when the median in Collier County was 72 days. The market gave buyers a little more time to think, and sellers a little more time to wait. Supply coming to market also thinned. Around 1,154 homes were newly listed in Collier County in December. That was an 18.2% decrease compared to 1,410 new listings in December 2024. Fewer fresh options at the end of the year, and more patience required to move the ones already posted. Zoom out to the state and the country for a baseline. Florida's median home price in December was $425,000, the same as November. The median Florida home listed for sale measured 1,623 square feet, with a price of $260 per square foot. Across the United States, the median list price was $399,950 in December, a slight decrease from the prior month. The median American home listed for sale measured 1,800 square feet, with a price of $220 per square foot. These are the scaffolds on which local realities are built. These Naples numbers refer to listings, not closings. They are asking prices and time on market snapshots. What gets agreed to at a closing table is the part that becomes history. And in Florida, the closings kept coming. One settlement and title firm based in Sarasota oversaw nearly $500 million in real estate transactions statewide in 2025. More than $470 million of that total were insured transactions. Single-family homes, condominiums, multi-party closings. While one company's tally does not capture an entire market, it does confirm that deals continue to finalize across regions. Closings are commitments, not intent. The paper turned into keys. This divergence, international strength in Miami, cooling listings in Collier County, steady closings statewide, illustrates the split screen that defines Florida real estate right now. Local dynamics differ. The pipeline from abroad keeps filling specific buckets. And operationally, the machinery is still humming. In Miami, a 15% share of international buyers in 2025 means every seventh closing involves a passport. Stack that against a statewide foreign buyer share around 5%, and the metro's global weight becomes clear. At the national level, with an average around 2%, Miami is not just above trend. It is off the chart. The geography inside Miami matters. Brickell's towers are repositories for cross-border capital. Downtown Miami's urban core feeds liquidity into the rental market. Edgewater's waterfront is a canvas for pre-construction offerings. Sunny Isles builds sky bridges between Latin America and the Atlantic. It is not just that money lands in Miami. It lands in specific neighborhoods with specific rules. The financing structures matter too. Staggered payment plans and pre-construction allow investors to commit over time rather than at once. In a world where interest rate policy moves costs up and down, spreading capital over months or years becomes a buffer. Decisions from Washington ripple through the spacing of deposits in Brickell. Conversations about developer incentives happen with one eye on borrowing costs. The mechanics are real, even when the numbers are arcane. Signals suggest these dynamics influence who can play and when. Developers calibrate timelines to match the cadence of international demand. Buyers tie commitments to their home currency's performance against the dollar. Investors who want to diversify out of domestic volatility use Miami's legal predictability as a shelter. 93% of international buyers telling you security matters signals behavior that is unlikely to change quickly. Fort Lauderdale and West Palm Beach are crucial in the clustering effect. When 45% of Florida's international sales occur across Miami, Fort Lauderdale, and West Palm Beach, you end up with a corridor that converts foreign savings into Florida property records at scale. That corridor absorbs much of the state's foreign demand shock, leaving other regions freer to set their own equilibria. Then there is Jacksonville. Commercial property there shows a different signal. Construction activity slowing, vacancy rates beginning to stabilize. One sector remains in expansion mode, a reminder that uniform stagnation is not the story. The details matter. Leveling vacancies indicate an end to oversupply pressure, while an expanding sector hints at targeted demand finding room to run. The texture of the market is as important as the headline direction. On the Gulf Coast, Collier County's numbers speak to patience. 75 days on market in December tells you deals require more conversations. A 5.8% year-over-year decline in median list price to $729,725 tells you sellers are adjusting expectations from December 2025's $775,000 benchmark. A 5.5% drop in price per square foot to $415 shows that square footage itself is repriced, not just the package. The typical home in Florida listed at $425,000 in December puts a number to the midpoint. At $260 per square foot and 1,623 square feet, that is a template many local markets calibrate against. Nationally, a $399,950 median list price and $220 per square foot on 1,800 square feet is the broader canvas. Against those baselines, Miami's $4.4 billion in international purchases is not just heat, it is a pressure point. The closing pipeline reinforces that Florida's market is not locked. Nearly $500 million in transactions handled by a single settlement provider in 25 reflects operational throughput across residential and complex closings. More than $470 million insured within that total suggests lenders and buyers are still aligning risk and coverage to complete deals. The lever may move slower in some pockets, but it still moves. Who is affected by this split screen? Sellers in Naples and broader Collier County, who listed in December, faced a median 75 days to find a match, 2 days longer than the national median of 73. They navigated a market that saw 1,154 new listings in December, down from 1,410 a year earlier, fewer new entrants, longer marketing times, and lower per square foot asks reshape pricing conversations. Buyers in Collier County encountered a landscape with more time and potentially more negotiation room compared to the fast lanes of South Florida's international corridors. The difference between $415 per square foot in Naples listings and $260 at the Florida statewide median also sets expectations about product, location, and premium. Numbers are not just math. They are negotiation angles. In Miami, sellers benefited from a buyer pool with global complexity. 15% of transactions attributed to international buyers in 2020 introduces different timelines, financing methods, and price sensitivity. More than 5,300 properties by foreign buyers in a single year changes the depth of the market. A base of 4,000 the year prior shows the slope of that change. It is a market that can absorb premium units in a way domestic-only markets cannot. Title agents, attorneys, and lenders across Florida worked through those flows. Nearly $500 million in closings managed by one firm in 2025 tells you that despite evolving interest rates and insurance costs, deals continued to convert from contracts to deeds. More than $470 million insured within that stream shows risk transfer remained functional. Compliance, underwriting, and execution scaled to keep pace with real demand. Look at Miami's international influx one more way. If Florida takes 21% of all international home sales in the country, and 45% of Florida's international sales are clustered in Miami, Fort Lauderdale, and West Palm Beach, then roughly 9 to 10% of all international home purchases nationwide flow through those three markets. That is not diversification. That is concentration. In that context, pre-construction becomes a barometer for what happens next. Growing international presence in new development signals faith in delivery timelines and confidence in post-completion demand. Payment schedules that scale over months or years create flexibility to navigate interest rate adjustments. The pipeline is not fixed. It breathes. The broader Florida median of $425,000 unchanged from November to December suggests stability at the statewide level at year-end. A $399,950 national median that dipped slightly from the prior month gives a contrasting backdrop. Florida's $260 per square foot versus the national $220 underscores the state's premium relative to the country at large. Within that, Miami's position at the international crossroads and Naples's deceleration illustrate how averages can hide motion. In Jacksonville, construction slowing and vacancy rates stabilizing set the stage for a new balance. One sector continuing to expand hints at structural demand that is indifferent to a broad pause. Commercial space is not just about square footage. It is about tenants, leases, durations, and substitution effects. Stabilization means landlords adjust, lenders recalibrate, and developers pick their spots. Back in Collier County, the count of new listings, 1,154 in December, down 18.2% year over year, matters to absorption. Fewer new entries reduce choice and can buttress prices, even as the median list price fell to $729,725. The relationship between supply and patience is delicate. 75 days on market sends a message. Deals are there, but they are negotiated over time. In Miami, the growing list of international origin countries, Colombia, Argentina, Mexico, Brazil, Venezuela, maps onto capital preservation strategies. The idea is simple. Park assets in a market where legal protections are predictable, returns can be earned in dollars, and exit liquidity is robust. 93% of surveyed buyers recognizing those attributes is a signal, not a guess. It is why the new construction pipeline attracts foreign capital at the earliest stages, where appreciation before delivery is part of the plan. Florida's status as the top destination for international home buyers for 17 years builds its own momentum. Networks form. Processes standardize. Lenders and title firms create workflows for cross-border documentation. Developers tailor payment plans to match international cash flows. It is an ecosystem, and $4.4 billion in Miami international purchases in 2025 is its latest proof of life. On the ground, transactions finalize despite friction. Nearly $500 million processed by a single settlement firm in 2055 across Florida shows resilience in execution. More than $470 million in insured transactions underscores that risk management kept pace. The details, attorney oversight, multi-party closings, tell a story about professional infrastructure that makes the market possible. When you compare statewide figures to local ones, scale and variance reveal themselves. Florida's median home is listed at $425,000, 1,623 square feet, at $260 per square foot. Collier County's median listed home is larger at 1,816 square feet, with a higher $415 per square foot that still fell 5.5% year over year. The national median list price of $399,950 on 1,800 square feet and $220 per square foot sits below both. Markets are not monoliths, they are mosaics. The long arc of demand in Miami's neighborhoods keeps reshaping the skyline. Brickell remains a magnet for pre-construction deposits. Downtown Miami blends residential and rental demand in a dense core. Edgewater rides waterfront scarcity. Sunny Isles stacks ocean views into investment theses. The data points, 15% foreign share, more than 5,300 properties acquired by international buyers in 2025, $4.4 billion invested, are the footprints those theses leave behind. In Naples and broader Collier County, the immediate story is tempo. 75 days on market in December is up from 72 in November. New listings of 1844 in December are down from 1,410 the year before. Median list price of $729,725 is down from $775,000 in December 2024. Sellers adapt, buyers test. The market breathes at a slower pace. The state holds middle ground in the numbers. A $425,000 median steady month-to-month at year-end suggests that as some markets accelerate and others decelerate, the midpoint holds. A price per square foot of $260 statewide versus $220 nationally hints at Florida's structural pricing power relative to other regions. That premium coexists with localized softening, a reminder that medians can be stable while submarkets sway. Operationally, the presence of nearly $500 million in closings at one settlement firm in 2025 means the industry's gears kept turning. More than $470 million insured means the protective layers around transactions were intact. Regulations and insurance costs evolved, yet closings were completed. It is the difference between intent and execution. Miami's pull is anchored by trust. 93% of international buyers naming capital security, legal stability, and strategic location as key factors is not marketing. It is a behavioral map. Florida's 17-year lead as the top destination for international homebuyers becomes the long runway for that behavior. 21% of all international home sales in the United States landing in Florida is the numerical proof of that runway. The Tri-County concentration, 45% of Florida's international sales across Miami, Fort Lauderdale, and West Palm Beach, creates a gravitational field. It draws in professionals who know how to close complex deals. It draws in developers who know how to structure pre-construction offers into attractive schedules. It draws in lenders who understand foreign income streams and collateral across borders. Those are the mechanics behind the numbers. The split screen extends to the north. In Jacksonville, slowing construction and stabilizing vacancy rates lean toward balance. One sector continues to expand, signaling that capital is not abandoning the market, it is selecting within it. Stabilization does not mean stasis. It means a shift from blanket growth to targeted growth. Back to Naples. A 5.8% year-over-year drop in median list price in December is not collapse. It is recalibration. Price per square foot down 5.5% to $415 is the kind of move that brings buyers back to the table. 75 days on market introduces time for inspection, time for negotiation, time for certainty. For some buyers, that is exactly the window they needed. For those watching statewide, Florida's $425,000 median list price, unchanged from November to December, serves as a lighthouse amid the chop. Nationally, a $399,950 median that edged down slightly from the prior month sets a horizon line. Against those, Miami's $4.4 billion in international purchases in 2025 stands as a surge. Against those, Collier County's December reset reads as local weather. In the trenches of closings, nearly $500 million in transactions run by one firm across Florida in 2025 frames the state's throughput. More than $470 million insured shows the safety nets were taut. Those are volumes achieved in a year defined by evolving interest rates, insurance costs, and regulatory considerations. Risk did not evaporate. It was managed. The causal chain ties together like this. Global capital targeted Miami in 2025, with international buyers representing 15% of purchases and acquiring more than 5,300 properties, deploying $4.4 billion. The reasons were structural. 93% cited capital security, the stability of the legal environment, and strategic location. The state's role as the top destination for international homebuyers for 17 years, with 21% of the nation's international sales, reinforced that pull. That demand concentrated in Miami, Fort Lauderdale, and West Palm Beach, capturing approximately 45% of Florida's international sales. Meanwhile, in Collier County, December's listing market slowed, with a median list price of $729,725, down 5.8% year-over-year from $775,000, a median $415 per square foot down 5.5%, and a median 75 days on market compared to 73 nationally. New listings numbered 1,104, an 18.2% decrease from 1,410 the prior December. Florida's statewide median list price of $425,000 held steady month over month. The national median was $329,950. Through it all, closings continued. One title and settlement firm processed nearly $500 million in statewide transactions in 2025, with more than $470 million insured. The machine kept converting offers into deeds, even as insurance costs and interest rate settings evolved. What comes next is a question of persistence versus adjustment. Base case: Florida remains active, with Miami continuing to benefit from concentrated international demand, statewide median pricing holding near recent levels, and professional infrastructure facilitating steady closings. The corridors, anchored by Miami, Fort Lauderdale, and West Palm Beach, are positioned to translate overseas demand into signed contracts, especially where pre-construction offers stagger payments. Southwest markets like Collier County may continue to trade on time and price, allowing recalibrations like a 5.8% annual drop in median list price to find new equilibrium. Watch two things closely. First, interest rate policy, because shifts in borrowing costs and forward guidance flow into pre-construction payment schedules, investor appetite, and time to close. Decisions filter into whether a buyer prefers an early-stage deposit in Brickell or waits for delivery in Edgewater, and they influence the statewide cadence that saw nearly $500 million in closings in 2025 for one firm. Second, insurance costs and regulatory considerations, because they shape underwriting for the more than $470 million in insured transactions and can alter affordability and risk assessments from Miami's high-rises to Naples' single-family listings. Both variables can tilt the balance between a 15% international shareholding in Miami and a local market like Collier County finding its price and time equilibrium. Florida is not one story. It is multiple stories unfolding on the same map. Miami counts buyers from continents. Naples counts days on market. Jacksonville counts cranes and vacancies. The numbers build the narrative. The narrative decides where capital flows next. If you found value in seeing the state through its numbers, share this with someone who watches Florida move.